Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing, but trust me, it's not as boring as it sounds. This one has a twist. It's about a small company making a big bet in the world of crypto. Are they geniuses or just jumping on the bandwagon? Let's find out. Alright, so this document is a Form 8K, a current report. Basically, companies use this to tell the Securities and Exchange Commission, or SEC, and therefore the public about important events. This particular report is filed by C2 Blockchain Inc. on March 25, 2025, and it's about something that happened earlier in March. Specifically, the report is about an event that happened on March 9, 2025. This is when C2 Blockchain entered into an agreement with another company. Scroll Entity Registrant name Scroll C2 Blockchain is a company incorporated in Nevada. You can see their file number and tax ID, but that's not really important for our purposes. What matters is what they do. The main event here is that C2 Blockchain is planning to invest in CoinEdge Inc., a Florida corporation. They've signed a non-binding shareholder agreement, which basically means they're serious about the deal, but things could still change. So what's the deal? C2 Blockchain intends to invest $100,000 in CoinEdge. In return, they'll get a 10% ownership stake in CoinEdge. It's important to note that the agreement is still not finalized, meaning they still intend to consummate it within the coming months. Scroll shareholder agreement, the company intends to invest $100,000 US Scroll. That 10% stake gives them voting rights on shareholder matters, but it doesn't give them any automatic rights to CoinEdge's profits, intellectual property, or how CoinEdge operates. CoinEdge keeps control of pretty much everything. They're in charge of developing, launching, and running their cryptocurrency lending and financial services platform. C2 Blockchain's approval is only needed for really big stuff, like if CoinEdge wants to merge with another company, get bought out, or sell a big chunk of itself. C2 Blockchain won't be involved in the day-to-day running of CoinEdge. They don't get a seat on the board or any executive power. However, CoinEdge has to provide them with financial reports every 3 months, so C2 Blockchain can keep an eye on things. CoinEdge owns all the intellectual property, technology, and assets they develop. C2 Blockchain doesn't get any rights to CoinEdge's patents, trademarks, software, or trade secrets. If C2 Blockchain wants to sell its stake, CoinEdge gets first dibs to buy it back at fair market value. C2 Blockchain also can't go and start or invest in a competing crypto business for 3 years after they sell their shares. Any disagreements will be settled through arbitration, a type of dispute resolution in Miami, Florida, and Florida law will govern the agreement. Both companies are financially and legally independent, meaning one isn't responsible for the other's debts or screw-ups. This next bit is about C2 Blockchain's status as a shell company. Basically, a shell company is one with no real business operations or significant assets. C2 Blockchain says that they used to be a shell company, but that's not the case anymore. Back in January, the SEC qualified their offering statement. That's a statement filed when a company wants to raise money from the public. Because of this, C2 Blockchain claims they're no longer a shell company. Scroll the commission of its offering statement on Form 1A and ceased to be a shell company is making a $100,000 investment in CoinEdge, a crypto lending platform. So what does all this mean as meant in a $100,000 investment in CoinEdge, a crypto lending platform? Exhibit 10.1 is the shareholder agreement itself, and Exhibit 104 contains some technical data. Now let's analyze what all this means. Account C2 Blockchain is a small company making a relatively small investment in the risky world of cryptocurrency. $100,000 is not a lot of money in this space. This could be a smart move if CoinEdge takes off. C2 Blockchain gets a piece of the action for a relatively low price. If CoinEdge doesn't do well, C2 Blockchain only loses $100,000. However, the agreement is heavily weighted in CoinEdge's favor. C2 Blockchain has very little control over CoinEdge's operations, and they don't get any automatic rights to its profits or intellectual property. The only way for this to pay off for C2 is if CoinEdge gets bought for a huge amount, so they can cash in their 10%. One risk is that crypto businesses are extremely volatile. CoinEdge could go bankrupt tomorrow, leaving C2 blockchain with nothing. Another risk is that the agreement is non-binding, meaning CoinEdge could change its mind or renegotiate the terms. This could also be bad for shareholders if the $100K investment that they intend to make doesn't pay off. It could leave shareholders with nothing. Overall, this investment looks like a high-risk, high-reward bet. It could pay off big for C2 blockchain, but it's also very possible that they'll lose their entire investment. Goliki, thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate Dakota deep dives. What are your thoughts on C2 blockchain's investment? Let me know in the comments below.